All right, so today is the big day, the day that everybody has been waiting for. So, what's been happening today? Well, Jerome Powell, our Fed chief, has delivered his speech at the Jackson Hole Symposium in Wyoming. And yes, the markets are moving as expected because we all have been waiting for this. So, what exactly did he say? How are the markets reacting? Good? Bad? We'll take a look at this. So, with that said, let's get started. This is Coffee with Marcus and Mark, and in this show, we are going to talk to you about what's happening in the markets now. We are trading it, and today is Friday, August 23rd, and it is my dad's birthday. Happy birthday, Dad. Okay. So, first of all, this is the 5-minute chart of yesterday, the S&P 500, and as you can see, yesterday closing lower, being nervous going into today, where Jerome Powell is addressing his fellow bankers and talks about the economy, the the bank's policy, and all of the good stuff. And everybody thought maybe he says something that we don't like because what is everybody expecting? Everybody is expecting that the Fed will lower interest rates in September. The question is, by how much? A quarter of a percentage point, or could it be as high as half a percentage point? So this morning, Powell grabbed the mic and look at this. The markets initially had a positive reaction to this. I mean, in overnight trading, we are already trading higher. So you see, the markets opened with a gap higher. And then during Powell's speech, it was up, up, and away. Why? What did he say? Well, the one thing that traders wanted to hear is that Powell confirms what everybody is thinking and saying, that the time has come for the policy to adjust. What does it mean? No longer raising interest rates, no longer holding interest rates at the high level, at the highest level that we have had in 23 years. No, it is time to adjust, to move lower. However, so he said the direction of travel is clear, which means lowering. And the timing and pace of rate cuts, meaning when and how much, will depend on incoming data, the evolving outlook, and the balance of risk. Anyhow, it's more like the incoming data. And we know we still have some time until the next Fed meeting because it is in 26 days. We talked about this yesterday. During these 26 days, we do have another jobs report that is coming out. We do have the core PCE, the Fed's favorite inflation gauge. We have the CPI being released. We have the PPI being released. So there is still a lot of data coming out in the next 26 days. However, as you can see, traders are now expecting still the Fed will lower interest rates. So the direction is clear, lowering by a quarter percentage point, 67.5%. That has come down. Let's actually compare these and look at what happened here. If you compare it over the last few days or over the last few weeks, let me just zoom in so that you can see it. As you can see, there was a time when we were as high. This was, a month ago? We were as high as, 90 something percent that it will be a quarter percentage cut. Recently, as you can see, some traders do believe it might actually half a percentage point. So there's right now a 37% probability for half a percentage point. Anyhow, so a few more highlights from Powell's speech. I think this was the funniest. The good ship transitory, right? So when he said, the good ship transitory was a crowded one, with most mainstream analysts and advanced economy center bankers on board. I think I see some former shipmates out there today. Remember when during the pandemic and inflation was going up to 9%, and Powell and the gang keep saying it's transitory, and then at some point they said, "Yeah, well, it ain't." So, anyways, I think it was good to see him making fun of himself. Anyhow, so the markets right now is okay. First, sigh of relief. At least he doesn't say, "Well, I think we have more work to do," because you know that these were his words for the past few months, years, I don't know, that we have more work to do. He said actually that his confidence has grown that inflation will keep coming down. And this means probably lowering interest rates. So as we can see right now, the S&P still up 0.8%. The Nasdaq up 1%, the Dow up 0.6%, but the big winner today, the small caps, the Russell 2000 rallying 2.8%. So the big winner today right there. VIX also moving lower again right now at 16.5 after yesterday. The VIX, the fear index, was moving a little bit higher. I mean, we still see this massive spike, so ignore the spike. But yesterday, moving a little bit higher. Where did we end actually yesterday? Yesterday, we ended at 17.5. Today, moving lower right now at 16.5. So what do interest rates say to all of this? Well, the 2-year yield is moving lower again. So is the 10-year yield. So as you can see, the 10-year yield right now at 3.8%. The 2-year yield remains below 4 or is dropping below 4 again after yesterday. Let me just see. Yesterday closing at 4.01. Today below the 4% mark again at 3.928. All right. What does gold think about all of this? As you know, gold was making record highs earlier this week. Yesterday, a pullback. So yesterday, gold pulled back 1.2%. Right now, up 1.26%. Looking like we could make a new all-time high in gold. So we'll see. All right. Now let's take a look at our positions and let's see what's happening here. First of all, quick look at the heat map. We see that right now, pretty much everything kind of in the green. There's a few Procter & Gamble, Pepsi. So the consumer defensives right now, just around the unchanged mark, more or less. We see that the semiconductors are higher again. NVIDIA leading the pack here with 3.36%, Broadcom 1.5%. We see Apple up 0.7%, Microsoft slightly down, surprisingly, Tesla up 3%. So overall, it seems that the markets are still liking what Powell says. However, one of the things is, where will we end up this week? And this is where we have the tug of war between bulls and bears. So right now in the S&P, we are up 1% for the week. In the Nasdaq, we're up 0.97%. In the Dow, 1%. Okay, it seems that we end the week positive here. And wow, look at the Dow. The Dow looks to me like we might approach. Yes, in the Dow, we are approaching new all-time highs. Right now, trading at 41,000. Not yet in the S&P, but within striking distance, and the Nasdaq a little bit further away. Because on August 5th, when we had this sell-off here, the Nasdaq got hit the hardest, being pushed into correction territory. All right, so WTF with this up. Win the fear. There's nothing to win. There's no fear in the markets right now. No positions there, so let's focus on our wheel positions. And yesterday, CSIQ, after reporting earnings, had a bad day. Yesterday, massively down. Today, clawing some of it back, as you can see, up 8% for the day. So that's good. Nothing else to do. And we talked about it yesterday when we looked at the earnings analysis, right? That we often do see, when we see a double-digit price change to the downside on the day they reported earnings, that they might actually, within 7 days, being able to recover it. So we'll see what happens here. But good to see that CSIQ doesn't have a follow-through to the downside today. Instead, it is rallying right now, up almost 8% right now. Well, we're exactly at 8.1%. Halliburton today also having a good day, up 1.5%. Still a little bit further away if we look here at the calculator. So for Halliburton, if I wanted to sell the 34.50 right now, let me actually move over to August 30th. So the 34.50, you see, I can get only around 1%, and I want to see 30% annualized. So nothing happening here with Halliburton. Need to see that it moves a little bit higher. Now, on the other hand, KSS, Coal's having a great day right now, up 4.4%. And this is where earlier, as we were going into this rally, I actually did sell calls against my existing position and banked $2,256 in profits. I decided to go for 48 cents. I believe that right now, probably around 60 cents are available because coals has rallied. So my rationale for taking the 48 cents is because I looked and saw what happened here in the markets on the 5-minute chart of the S&P 500, and we see that the S&P 500 was actually reversing, as you can see. Now, this is where coals was stalling here for a little bit, right around this time at 1940. This is when I decided to sell my calls and didn't want to risk that coals keeps moving down. And this is where I got 48 cents. Right now, as you can see, probably 63, 64 cents available here. So woulda, coulda, shoulda, right? I mean, would have been possible to get some more premium, but here's what you need to remember. When trading, there's only two ways to enter. The first is too early, and the second way is too late. There you go. That's just how it is in the markets. You never, ever enter at the right time. So as you can see, I got 100% annualized RI, pocketed $2,256 in premium, and I'm happy with that. All right. Moving on, Merck. Merck today, yesterday, yesterday, Merck finished up while the overall market was lower. In fact, the S&P lost 1% yesterday, and Merck, on the other hand, gained 0.5%. Today, when the markets are up, Merck is slightly down, 0.3%. So it seems that Merck is doing the opposite of what the markets are doing. So I got filled at 120, so this is where I got assigned right now, nothing for me to do. Finally, UPS having another good day today, up 1.24%. And again, we have been staying in this range. We talked about it between 124 and 132. And right now, we're pushing into the upper half of the range. So the range here exactly at 128 is the middle of the range. And right now, we are slightly above there. So this is what is happening. I mean, super interesting day. And in a moment, we'll go back to look at what the index is doing right now and if the Russell keeps rallying. And before we do this, here is the dad joke of the day. And I can't wait until Mark is back because I've many of these dad jokes, where he asks a question and then I want to see if he knows it or not. So here's the question for you. What do you get when you cross a parrot and a caterpillar? What do you get when you cross a parrot with a caterpillar? A little walkie-talkie. Okay. Cute? Yes? No? Hey. I liked it. Anyhow, so let's take a look at the markets and see where we are. The S&P right now trading around the opening price. Still a little bit higher, as you can see, up 0.75% for the day. The Dow looks like a Dow is ready to make a new all-time high today. Again, let's switch over to the daily chart. Not quite yet. Not quite yet. So let's see. In order to make an all-time high, the Dow would have to move above 41,376. And right now, we are exactly 300 points away. So possible, might not make it today. So Dow just shy of making all-time highs. S&P shy of making all-time highs. Nasdaq today up 1%. And the Russell, the small cap stocks are up and away, trading at highs of the day at 3% higher right now at 220. Wow, what a move for the Russell. All right, so this is what's going on in the market. And Powell came, Powell went, Powell spoke, and here's how the market's reacting. And right now, everybody is still scratching their head as of what exactly he means when he says, okay, we need more incoming data, right? And what exactly is he looking for? And this is why right now, the good news is he didn't say anything that spooked the market, but he also didn't say anything that really got the market super excited. So today, he stayed within the expectation. So Powell against the market. Who won? Well, it's a tie. There we go. And with that said, I hope that you enjoyed today's show. If you did, give me a like. Really, really appreciate this. If you think that this was some good stuff worth sharing, there's a share button right underneath. Just click on it and you can share it on various platforms and with your friends. And if this was your first time, click on subscribe, because we will be live again next week on Monday. And until then, have a great weekend, and we'll see you next week. Take care.